I'd like to build the case a little more here that the Fed is probably making a mistake. I say probably because I have to from a compliance point of view, but I really do believe the Fed is making a mistake.
The Federal Reserve has the markets and consumers on edge, as many pundits, analysts, and economists are predicting another 75 basis point increase in interest rates before the end of the year. Another rate hike could be the final blow to the economy and push up toward a deep recession, if not a depression, as many market data points are declining across the board. In her In the Know update, Cathie didn't mince words about her disdain for the job that the Fed is doing up until this point, and is calling for the leadership to open its eyes to the data. Cathie believes the Fed will have to pivot as our economy and markets cannot take another 75 basis points, and the Fed will realize this sooner than later and change course. But amidst the chaos and uncertainty, Cathie believes that the data is clear that Bitcoin, although down significantly since the beginning of the year, is the bright spot in this market. Bitcoin has been trading sideways for quite some time as it currently trades for $19,367, up 0.2% in the past 7 days. Despite the market sell-off across many assets, Cathie stated that Bitcoin is holding up much better because of its innovation, and Cathie firmly believes that innovation solves problems. But before we listen to Cathie, if you're new to the channel or not subscribed, consider hitting the subscribe button as we put out daily content to keep you updated on the current market and news.
Data-driven Fed, are you listening? So we'll start with from their peaks. We've got gold price, the gold price down 17%, copper down 30%, lumber down 73%. Think about that. Housing is collapsing. Iron ore down 45%. Infrastructure around the world has run into trouble, especially China. Corn down 17%. Silver down 29%. DRAM prices, which are chips, semiconductors, down 46%. The Baltic Freight Index down 48%. That's an indicator of supply chain issues. The Baltic Freight Dry Index, which is just for dry goods, down 65%. Oil down 29%. And many people have been dismissing these as saying, yeah, but that's, they went to sky-high prices. They're still not down on a year-over-year basis. That's not true anymore. Gold is down 3%. Copper is down 17%. This is as of today. Lumber is down 28% on a year-over-year basis. Corn is an exception. It is up 27%. Again, Ukraine being a big problem there. We have silver down 9%, DRAM prices down 33%, the Baltic Dry Freight Index down 65%, and oil and corn. Oil is up 14%. That's as of today. It's had a big pop recently, but we do think, having come down from $130 to $90, it is in a downtrend, mostly because of demand destruction. There's another kind of esoteric price out there. I remember it from my days diving deeply into economics, and it's container board prices. This gives you a sense of, how tight the box market is because of a huge amount of trade taking place. So they are down 29% from their peak and about 53% from a year ago. So just taking the evidence and putting it together like this, there is a lot of data to be driving the Fed, which is what they say is happening, but we don't think it's happening. I just rattled off lots of examples. Markets are selling off across the board, and that's very unusual. It's associated with crises and more convincing evidence to us that the Fed is too tight and that it will pivot. And when it does, it will do so, we think, significantly. Now, first, it might simply be rhetoric, because they always like to tee us up for what the next moves are going to be. And we haven't heard that rhetoric yet, despite all the evidence I just shared with you. But that evidence I just shared with you tells us that the Fed is going to get the message loudly and clearly somehow. And it may not be showing through in the numbers they want to see, but it will. It will. They are huge lagging indicators. They're basing policy on lagging indicators, not what they're supposed to be doing. Anyway, if you take, in the US alone, if you take equities and bonds and look at what's happened since the peak, you will see that the loss to investors is more than twice what we saw in 08, 09. That's how bad this is, because bonds are selling off with stocks this time. So and one of the reasons for that is a seizing up of liquidity. As I mentioned, if people are facing margin calls or in financial difficulty, they're going to sell their most liquid asset. They will have no choice, especially with margin calls. Most liquid assets tend to be government bonds. And I think that's why we're seeing the backup in government bonds here, despite all of the deflationary signals in the pipeline. Interestingly, one price indicator associated with innovation is beginning to hold up better than other prices, and that's Bitcoin. It's been interesting to see it flatline in the last month, while other indicators are reaching for new lows. Now, this is not surprising in the late stages of a bear market. In our experience, innovation starts to outperform in the late stages of a bear market. Why does that happen? It happens because innovation is the new leadership. Innovation solves problems. Innovation solves the kinds of problems we have today: supply chain, food, energy shortages, think the genomic revolution, electric vehicles, and so forth. And so we believe that innovation should outperform if we're toward the end of this bear market. If the Fed's close to pivoting, even in its rhetoric, I think we are. So with that, I guess I'd like to reassure you that it feels like we're moving towards a cathartic moment. And, I think that the 75 basis point increase, if that's what the Fed is going to do, is going to result in some financial signals that the Fed will have to pay attention to. Maybe it didn't have to pay attention to the guilt trip, but it should, because it is the reason it should have the guilt trip, because it is the reason that that near Lehman event happened in the UK. And so it is darkest before the dawn. We think the pivot is close, if in nothing else but rhetoric in the short term. And we certainly hope that the Fed gets away from this need for unanimity and a united front, when really we have all of these Fed members and presidents for a reason to debate.
To watch the full interview, check out the link in the description. What do you think of Cathie's thoughts here? What do you see the Fed doing in the next few months? Leave a comment. If you found value in the content, hit the like button. It only takes a second, but it really helps the channel find similar viewers like you. If you're new to the channel or not subscribed, make sure to hit the subscribe button, as we put out daily content to keep you up to date on the current market and news. Thanks for watching, and we'll see you in the next one.